Thank you. It's a little bit like church. For those of you who came in toward the end, there's a few seats up here if you want to come on up here. The discussion this afternoon is about Faro Corporation, and I've titled the talk, A New Beginning at Age 90. In the month of October, we celebrated 90 years in Cleveland, Ohio, and we started our company in 1919 with two gentlemen who happened to both be German immigrants. This is actually a picture of our first facility that we operate yet today, although it has been a bit modernized, which is on East 56th Street. We refer to this as 4150. We manufacture a product there that's called porcelain enamel, which we manufacture yet today, a product that the company was founded upon. And we're a bit of a ubiquitous company, so I'll talk throughout the afternoon for the next 25 minutes or so, and I'll sprinkle some conversation about our various products. Porcelain enamel is just that. It's a porcelain glass-based material that if you were to open up your oven today and look inside and see a gray and white speckled type material, that's porcelain enamel coating metal. Or if you looked at a spinner basket perhaps in an appliance or the inside of a hot water tank, the lining is porcelain enamel. Today we have evolved from those humble beginnings, which these two gentlemen founded with $1,000 when money was really meant something in 1919. And today we have not only our headquarters here in Cleveland, but three other manufacturing facilities, our global research facility in Independence, Ohio, and then an office site downtown and another in Independence. We consider ourselves a leading global producer of performance materials and specialty chemicals for a wide variety and diverse end-use sets of products. And we manufacture products in 23 countries around the world and sell products in 100 countries around the world, and today have about 5,400 employees. There's not a lot of reason to be in markets if you're not number one, or in some cases number two. So we strive always to be in the first position to grow our marketplaces. We're a world leader in conductive metallicized paste for solar cells, which I'll describe in a moment, a variety of glass coating materials, tile and metal coatings, pigments, and also coloring materials. We focus on very specific and special applications and product lines where we can differentiate ourselves through technology and application of that technology at our customer's place in business. The Faro checkmark, which is a little logo I happen to wear on my coat today, has been known and respected around the world for over 90 years. We entered Asia over 50 years ago. We entered Europe in the 1930s. We entered Australia 75 years ago. So from those humble beginnings in 1919, Faro quickly went international and in fact grew up more as an international company than a US one. As a consequence of that, we have about 60% of our revenues today generated outside the US. Last year we were a $2.2 billion company. We'll be smaller this year as a consequence of the global recession. And we have over 7,000 active customers around the world. The point of this slide is to show you a little bit of our diversification, both in geography and then in our product end uses. And short of something like the global recession we've just come through, we typically have a little bit of protection, if you will, as a consequence of our diversity in both customers, sales, products, and end uses. So with that little bit of a background, and you might think a company that's 90 years old and has had some fair amount of success over the years, why would we think about changing? And so I wanted to give you a little bit of a short history of what I found when I came to Faro. This is a rearview mirror look, and this is a company whose sales were growing but whose margins were shrinking. And particularly for those of you students who are about to enter perhaps the business world, margins are oftentimes more important on the bottom line than what happens to you on the top line. So what you see in this graph are those fine blue lines are the S&P 500 from 1999 to the end of 2004. And if you look at that, you can see a relatively nice growth line. The middle blue and the darker black are our peer groups and so on. Unfortunately, the green dotted and red lines were Faro. So we found ourselves in a situation as I entered the company where we'd been growing revenues, but margins were shrinking. Then if we looked at our operating profit growth, we saw the same thing. A bull market that occurred post 9/11 completely bypassed our company, and the consequences to that were that we put ourselves in danger of being non-sustainable. So as I entered the company in 2005, we thought long and hard about how do we emphasize and orchestrate change in this organization. We'd really become a company with a cost burden that was non-sustainable. We were non-cost competitive in virtually every market we participated in. We didn't price very effectively and cover raw material cost. In other words, if raw materials went up $1, our prices did not cover the raw material cost or the margin. In 2004, we know we left about $70 million on the table by not covering raw material costs, whether those were energy and utilities or other types of raw materials. Any turnaround, in my mind, is grounded in the people who have to do it. So the first thing we really had to effectively change at Faro was the culture of the institution. And we created the tenets, our operating tenets, in throughout the year of 2005 and formalized them in early 2006, what we call win from within. And win from within is actually quite simple. It's be outstanding at what you control and effectively manage things that are out of your control. I just mentioned raw materials a moment ago. Raw material pricing or costs are usually out of our control. But our ability to effectively manage the change and manage the margin differential enables us to either be sustainable and profitable or not. We wanted to increase decision-making authority and velocity. Oftentimes I've found in my career, you don't have the opportunity to have 100% of the data to make your decision. Usually it's closer to 75 or 80. And outside of perhaps the accounting world where you have to get it right all the time, or the legal, ethical world where you have to get it right all the time, a great many business decisions are made without the benefit of 100% of the data. And those who act with velocity and act and move forward quickly and then take accountability for their actions and deliver on their commitments, more often than not, in my experience, have been the winners at the end of the day. Motherhood and apple pie, customer centricity, operational excellence, everybody talks about it. We had lost our way with regards to understanding how our customers make money. So in changing our culture, we wanted our organization to focus on understanding the value you bring to the customer and assisting them in making money. Because as much as we may or may not like to talk about it, we live in a capitalistic society, and our company is measured by its ability to bring value to shareholders and its good corporate and social citizenship. So one of the tenets we wanted to orchestrate with our organization rapidly was understand how your customers make money, understand how they are successful, and help them be successful. If you do that, good things will happen to you. And finally, operational excellence, what people tend to think about in manufacturing, but we think about in every facet of our operation. It's how you run your integrated systems, it's how you run the cash management system, it's how your treasury operation works, it's how your market sell process works, it's standardization of process and scale so you can enable people to be successful. You can't do this without good people. We spend a lot of time trying to attract and, more importantly, retain the good people we have. And then finally, you have to model these values and these ethics. And I hold the leadership group in my company to a higher standard than I do people who are not in leadership roles. Pardon me. Everybody has a standard by which they're measured upon, but leaders in our company have to lead. And in fact, we've built in our organization a set of values and behaviors that we measure our leadership groups on. I didn't bring 200 of these, so I won't pass them out, but you're certainly welcome to look at them later. But these start with the word trust, and it's trusting your team in order to do the right thing. I don't believe in budgets from the top down. I believe in setting direction and telling the organization where we need to be, and people delivering budgets from the bottom up. But once they make that commitment, that's their budget, and they're accountable for it, and they're accountable for that delivery. It's all right to make a mistake, but you learn from the mistake, and once you make it, you don't make it again, because if you do, you'll lose. And at the end of the day, this is all about winning and winning from within. So how have we done? Well, in 2006 to 2008, we changed our business strategy fairly dramatically. We said this is all about a turnaround. Forget about growth. The top line will take care of itself later. If we don't get our cost structure right and rationalize our manufacturing footprint, which is a nice way of saying close plants, we're not going to be here to celebrate our 90th birthday, much less years beyond that. So we went after the opportunity to rationalize our manufacturing footprint, particularly in Europe, consistently and constantly focused on the operating tenets of win from within, and created a burning platform and a sense of urgency around it. I shared that same data you just saw on those charts with what I call my corporate leadership team, which are about the top 70 people in the company around the world, early in 2006, and said, this is a non-sustainable curve. We're going to grow our way out of existence fairly quickly. If you don't believe me, look around at our hometown where about 20-odd Fortune 500 companies of 15 or 20 years ago are no longer here. So since I'd like to be here, and I happen to only be the 7th CEO in the history of this company, I decided that we would try to change that. The results are that, as you can see, starting in 2006, well, the top line grew nicely, and the reason you see that green versus blue is we use products as precious metals in our operations in electronics specifically, which we pass through to our customers at virtually no margin. I won't get into the detail behind it, but suffice to say, what's more important to us is what's in blue. And we started measuring our annual adjusted EBITDA, our earnings before taxes and interest. And what you see is we moved from $186 million, and by the time we got to the trailing 12 months, which is a very favored measurement of investors and debt holders, of 9/30/2008, we were on track to deliver in excess of $200 million of EBITDA. Why that was important to us is because we also carried about $600 million of debt. And what our bankers like to see is what's called a leverage ratio. That's around 3 times debt versus EBITDA. So it was important to us to deliver EBITDAs in excess of $200 million. To give you some perspective, if you went back in 2004 and 2005, those numbers were down around $100 million. And then lo and behold, October of 2008 hit, and what you can see as we went through, in 2008 hit, and what you can see is a dramatic drop in our EBITDA from the trailing 12 months of 9/30/09, that $106 million. In other words, we lost almost $100 million of value, but we were still carrying that debt, which was a problem. So the recession came, and starting in October of last year, my management team, which is 5 other people and myself, literally met every other day in a conference room in Faro's headquarters in Cleveland and put actions in place to address what was occurring. Most people who are in the business world, and some of you who may not be but read about volumes disappearing. Car sales dropped over 50% and so on and so forth. Well, for a company like ours, which is heavily oriented toward automotive, appliance, building and construction, consumer goods such as consumer electronics, when the consumer stops buying, we're in a lot of trouble. And with a cost structure that wasn't yet fixed, we've made a lot of progress but wasn't fixed, we had a lot of issues on our hands. So we accelerated our restructuring efforts first. We already closed 4 facilities around the world in the earlier 2006 and 7 timeframe. We closed 4 additional facilities. We reduced our worldwide staffing by over 20%. We had 7,400 people when I came to Faro. I'm not proud to say that we have less than 5,200 today, but I am proud to say we've taken the actions and the hard decisions we needed to do to realize shareholder value, sustain the company, and keep 5,200 other people employed around the world. We reduced our selling, general, and admin expense by over 16%. In fact, every year since I've been at Faro, our SG&A expenses dropped dramatically. We were over $320 million just a couple of years ago. We'll be at about $260 million today. And I'll show you in a moment how we realigned our businesses. But most importantly were those tenets of win from within. And particularly for the students here, I get asked the question a lot about if there's one thing important to me as I'm going through my career search, what should it be? And in a word, I'd tell you communication. What I find is people don't communicate very well. And they think people can read their minds, and they like to use email a lot, or Twitter, or Facebook, or the telephone. Get eyeball to eyeball as often as you can. Look at the whites of their eyes or the blues, as the case may be, and explain to people in a dignified and respectful way why they either no longer have a role in your organization or why you need to take the tough decisions about what has to occur. And when you do that, you earn their respect and you can maintain the winning attitudes that you need for what's left behind. And recognize and celebrate wins, particularly small victories. So the consequence of that for us was we took $154 million of fixed cost out of our organization in 2 years. That's on a basis at the time of less than $700 million of fixed cost, a fairly dramatic reduction. What that then allowed us to achieve is a quarterly reduction in our break-even sales level of $80 million a quarter. To put that in perspective, in 2006, we had to sell $1.8 billion of materials around the world to break even. Today, we have to sell about $1.4 billion of materials around the world to break even. This is an example of that because as we went through the recession and the momentum of the recession built, What you'll see here is that we, on the other hand, showed very strong sequential performance in our organization as a consequence of having taken those actions. If you look in fourth quarter of 08 on the upper left-hand side of that screen, you see $390 million of value-added sales with 16.7% gross margins, delivering $22 million of EBITDA. Okay, but not good enough, particularly with a company with the debt structure we had. As you move forward to the third quarter of 09, we actually had less sales, $378 million, and yet our gross margins increased 800 basis points to 24.7%, and our EBITDA increased $30 million to $52 million. To give you a perspective, in the third quarter of 2008, we sold over $500 million worth of goods to produce essentially that same amount of EBITDA. So with $120 to $125 million less sales, we were able to generate the same profitability. That was incredibly important to our company for a couple of reasons that I'll get into related to that debt issue, which I've brought up 2 or 3 times. Then on October 5th, I announced a global reorganization of the company as well. We had at that point in time 3 business units with 3 operating vice presidents. Today we have 2, and we've structured the businesses differently such that our polymer and ceramic engineered materials had one mantra in life: produce cash. I want $2 of cash for every dollar of EBIT you produce. And if you can't produce that kind of cash, your cost structure is out of line. You have to be world-class in cost structure, you have to be world-class in SG&A, and you have to deliver cash because our blue businesses, electronics, color, and glass materials, are very high-growth, high-margin opportunity businesses that we need some cash from the other ones to invest in. At the same time, however, in those basic businesses, polymer and ceramic engineered materials, there are several market dislocations happening as we speak that we wanted to take advantage of. We didn't have the cash to do so, but we took an opportunity that I'll describe in a moment that allowed us to do that. First, let me tell you a little bit about these businesses. First on electronics, color, and glass. And I mentioned conductive metal pastes. Think about that in terms of solar cells. You probably can't see this very well, but I'll describe it. It's in a box because solar cells are actually quite fragile before they're put into a module. We manufacture a product that if you see those thick silver lines across the cell kind of going up and down, those are bus bars. And across that are fine silver lines. Those are actually conductive metal pastes. So we're the wiring on a solar cell. We're the guys that conduct the electricity across the cell, if you will. The back of that cell actually has an aluminum conductive material that we also produce. We're number 1 in the world. In 2005, we were a distant number 2. We put a different organization in place and restructured where we spent our research dollars. And today, Ferro is recognized globally as a leader in conductive metal paste for thick film applications in solar cells, with DuPont a strong number 2, and a tough Chinese competitor, a fairly distant number 3. In addition to that, we built last year, through this recession, a new manufacturing facility in Suzhou, China, which enabled us, as they went through the recession and as the stimulus packages started being put in place around the world, to take advantage of a key opportunity in China, which was China's stimulus on a strategic opportunity for the government, which was solar power, with local content, because they require 75% local content in China for China. And we're the only U.S. player in China for China participating. We also produce polishing materials for everything from eyeglasses and contact lenses to silicone wafers and integrated circuits, and enamel pastes and powders in our color and glass business. I'm sure none of you students recognize what this is, which happens to be it's, for those of you who don't know, a Corona beer bottle. We're the guys who are the white and blue. That material is incredibly important because it's actually glass-based and bonded into the bottle itself. The more important part is it's one of the ways our customer at Corona makes money. It's the cachet of their brand. It's not as exciting if it's a paper label, which I'll tell you a story about in a moment. We're also the guys on the back of your car. This is a cutout of a back window of somebody's vehicle. If you look on your car when you leave, because we all live in the winter part of the world, you'll see a black band around it. That's actually a very complex set of glasses between 2 panes of glass that form a very critical functional opportunity for us, which gives us the opportunity to have a high price elasticity. In other words, to drive margins. These businesses are all in the blue section, and one of the reasons they're such high margin businesses for us is that our raw materials are a relatively small part of our customer system, but our products play a critical part in the functional performance of that system. That enables us in things like solar cells to create 60% gross margins. And believe me, when you have 60% gross margins and relatively low SG&A, you can make a lot of money. So that's one of the reasons we're trying to create more cash in that particular business. A couple of other key points in these: global businesses, global pricing, global quality standards, global customers, product technology, tough, important sells. On the other side, in polymer and ceramic engineered materials, these are businesses that are more oriented toward regional applications with regional customers. We manufacture product in large lots versus small containers. It's heavy, it's expensive to ship around, so you tend to be a regional manufacturer. And yet in this area, I talked a little bit about product and market dislocation. The green chemistry wave is a very important one. We manufacture products in Europe that require special labeling because they potentially could cause harm to humans if used in applications such as teething rings for children. So we've developed a green chemistry called a dibenzoate, which I won't get into, but effectively as we're transitioning out of one product family into another, we're on the leading edge of being in a non-label situation where we can produce product for use in that same application that's considered safe and requires no special labeling. Being first into the marketplace, first mover advantage, gives you great opportunity to create greater margins for your shareholders. None of this matters a bit, as you'll learn if you haven't already in your classes or seen it in the marketplace, unless you have sustainable competitive advantage. And we create that around technology, our infrastructure, and our assets. The technology, first and foremost, is intellectual property. In those blue businesses I talked about a minute ago, electronics, color, and glass, we have over 150 patents and an awful lot of know-how involved in the technology in our glass and solar materials. Because of that, and because the fact of the matter is that our customers tend to warrant their product for long periods of time. The solar cell I showed you a minute ago carries with it a 25-year warranty from its customer. Q-Cells is our largest customer. They're the largest player in solar power in the world by megawatt. They're in Leipzig, Germany. When I was there in January, their CEO and I met, and he said to me, our prices dropped 40% today. You're going to have to drop your raw material prices 40% today. I said, Anton, I've got bad news for you. I'm here to raise prices. And I'm doing that today. And the reason we could do that was for two reasons. One, we were delivering to him a product that enabled him to increase the efficiency of his electrical production across the cell. As a consequence of that, we knew he was saving several $million on his production line in yield. As a consequence of that, we knew he was maintaining his #1 position in quality and efficiency in the marketplace. And we knew that he had very high switching cost. It would take him 2 years to qualify a new player to deliver what we were doing. And in that 2 years' time, we would continue to deliver better product for him. We raised his price, we made better margins, and today we are their sole source supplier. So high customer switching cost, understanding how your customer makes money, bringing value to them is an important lesson. The other comment I'll make quickly here is on infrastructure and assets. We use application technologists. A good many of our people in the field report to our customer's place of business as opposed to ours. Why? We want them to participate in the technology roadmap, in the product development cycle, and in the manufacturing process with their customers so they can understand how their customers make money. Go back to those very simple operating tenets. Customer centricity. Understanding why your customer chooses you is an important part of our strategy. I won't get into all of this, but I'll just tell you that technological capability and application understanding is also a very, very important part of what Faro brings to the table. I will tell you a story about color science and technology, since I showed you this bottle a minute ago. The company that manufactures this bottle for Corona actually came to us about a year and a half ago and said, we got a problem. The problem is these bottles are too thick. And the reason that's a problem is as we ship beer around the world, freight costs are killing us. And we've got to reduce the thickness of the wall of the bottle. And when we do that and put that through our furnaces at 1,000 degrees to 1,400 degrees, your label doesn't work. And we're getting a lot of cracking. So we've got a problem in that we think we're going to have to go to a paper label. And the issue for us is our brand, because our brand is built around this label. So we went to work with them, with those embedded application technologists, and in less than 90 days, delivered a product that worked, enabled them to lower their cost and improve their yield, and enabled us to improve our margins. That's understanding how your customers work and how they're successful. I've talked about debt a couple of times. The one thing we didn't solve from 2006 to today was our balance sheet. We had too much debt in the company, and we were ending up taking an enormous amount of our cash and handing it over to banks. That's okay if you're paying down your debt, but all we were doing was staying even. So last week, in fact, on Friday afternoon of last week, we successfully went into the marketplace over the course of the last 2 weeks and closed a deal where we raised over $200 million in what's known as an equity offering. Over $130 million of that was used to pay down debt last Friday, and another $50 million will be used to finalize our restructuring, yes, close some more facilities, consolidate into lower cost facilities, and also for 2 strategic growth initiatives, which essentially are acquisitions. We got tremendously strong reception from our investors because as we went through our math and explained the calculus to them of what we were doing and why, this normally would be considered a very dilutive transaction to your investors because we effectively sold, if you will, over 90% of our company in raising this amount of cash. It was not dilutive to our investors because of the amount of debt reduction and cost savings that we had already achieved and could show that we would achieve in the future. And as a consequence, it was oversubscribed. We were looking for about 30 million shares. It was oversubscribed to the tune of 78 million shares. What that's done for us is provide us additional funds to finish the restructuring such that by the end of 2010, our operational strategy to make Faro a world-class cost and expense structure company will have been realized. At the same time, it provides us additional cash to make 2 strategic investments around the world, and third, reduces our leverage and creates a cushion for us to operate over the next several years without many worries about our debt situation. So the new Faro moving forward. We'll finish our restructuring programs that we initiated in the fourth quarter of 2009, which were 7 projects around the world. We'll improve productivity and lower our support costs and reduce our SG&A expenses through these equity-funded restructuring initiatives I just mentioned. We will build a facility to deliver this new green chemistry to take advantage of the regulatory change, particularly in Europe that's happening, but also in California and New Jersey. We'll geographically expand one of our towel coatings businesses into the Middle East markets, where we have about $80 million of business today, but no local manufacturing. And again, we'll be, that word, first mover. We'll be the first into that local market, which will enable us, we believe, to create additional competitive barriers to entry for others. And then finally, this equity offering will enable us to go from being a hunted type of company to a hunter type of company, where we'll look actively for bolt-on and tuck-under acquisitions, particularly in our electronics, glass, and color businesses. Our way forward then really hasn't changed much. I use this terminology a lot inside Faro, which is constancy of purpose. And my view of our organization is quite simple. Nothing's really changed since I became CEO in 2006. We have 4 operating tenets that we operate under. We want to be legal, ethical, and credible. We treat people with dignity and respect. Maintain your focus on those tenets, perform, be accountable, and you'll win. Our electronics, color, and glass businesses are expected to deliver 40% gross margins and 20% operating margins for the company. We'll look for those bolt-ons in those areas. In the polymer and ceramic engineered materials businesses, we will invest in opportunistically for growth, but primarily for cost reduction and to deliver cash. Financially, we expect to be in the top quartile income performance versus our specialty chemical peers. I showed you a graph at the beginning of this. We were dead last against any measurement: return on equity, total shareholder value, cash generation, share price, gross margins, et cetera, et cetera, et cetera. Pick your favorite topic. We were dead last in 2004, 2005. We believe over the course of our planning period, we'll get into top quartile, and we'd like to be number 1. That means we have to create EBIT margins that are greater than 10% as well. We have lowered our balance sheet, our leverage ratio to less than 3.5 times. In other words, our debt load will have been substantially reduced, and we expect 3.5 times to be our ceiling and 2.5 times to be where we're aiming to go. What that enables us to do is gives us tremendous flexibility around the areas of utilizing that balance sheet to grow the company. So at age 90, we have a new beginning. We're a company that's been through a lot over the last 90 years. Very humble beginnings, a facility we still run today. We believe we have tremendous growth opportunities in some terrific high growth markets. We end up in things like iPhones, iPhones, where you have touchscreen displays, where metal powders and paste are utilized. The solar power by megawatt of growth is expected to grow at a 20% compound growth rate between now and the end of 2013. And at 2013, it's expected the U.S. will finally get on board and start building solar facilities. If those prognostications remain true, we are very well positioned to participate in double-digit growth rates in those blue businesses. We have a proven management team that over the course of the last 3 years has taken a company that's been in a lot of trouble, turned it around, fixed the cost structure, reduced the expense, changed the manufacturing footprint, fixed the balance sheet, and is now poised to show that we can grow and deliver a lot of value to our shareholders. We've got a significant new shareholder base who just invested over $200 million in us because they believe in that story and that track record, and that brings with it a tremendous responsibility on this management team. In fact, one of the thoughts I had flying back from New York when we closed this deal last week was one of being humbled. Humbled by the fact that we now had a fairly significant number of new shareholders with names like Fidelity and T. Rowe Price who are engaged with our company, and lots of people like you and me invest in those funds. And so we had a tremendous responsibility to people around the world to create value. We're committed to that. We're committed to win from within, and we're committed to winning in the organization. So FAIR is a quiet company in Cleveland that's been around since 1919. We're starting a new era, and it's clearly our intent to be around for the next 90 years and leave something for the people that come after us. Because I've been privileged to take on a position that's left for me, by the people who came before me, a very solid foundation upon which we've been building and trying to win from. Well, I have one other thing I would like to say before I get dismissed. I am on the board of this institution, and we had a meeting this morning. And I don't know if any of you have children who, or nieces or nephews who may be in high school considering college. If you do, you should ask them to take a serious look at this place. There's a pretty unique culture here. It's a pretty fabulous institution. I wasn't privileged to go here. I went to Ohio State. I do have a son here. I've met a lot of other people here. I would send them here again. So if you or others around you have that opportunity, you should take it. So there's a lot of good things happening at John Carroll, and I don't think we give ourselves, meaning the community, enough credit for that. So thank you all for listening. I appreciate it very much, and have a great evening.